seems like that the US dollar is on a roller coaster ride since last few months or almost a year as compared to all the other currencies, be it the rupees, pound, euro, etc. Hello and welcome to the In Focus series section of Drishti IAS. I am Aisha Singh, and in today's video we will be discussing about why the US dollar is strengthening as compared to all the other currencies. So let us first look at the timeline of the video. First we will be looking at what is the news, then about the strengthening of US dollar and why is it happening. Then the strong dollar helps US tourist or not, and what will be its impact on Indian rupee, and how will the RBI handle this situation when the dollar is performing so well, and what lies ahead. In the end we will be looking into a prelims MCQ and a mains practice question. This topic is of relevance from General Studies Paper 3 Economy. See, from both mains and prelims perspective, you should be able to know that how the strengthening of dollar will impact Indian rupee and what are the measures or how will RBI deal with this situation. And we have already seen that this year's UPSC paper a question was asked on this, that how the rates which was hiked by the Fed will impact rupee. So this is very much relevant from the exam perspective, and this is remaining very much in news. So let us see the news, and this news has been taken from the Indian Express, and it says that how the strong US dollar can affect everyone. And this word everyone denotes all the other currencies, be it rupees, euros, pounds, dollar and all others. Then the theme of today's video will be strong US dollar. So what is happening is that the dollar is near its highest level in more than 2 decades. So we have seen that after the pandemic, or the pandemic is already going on, but we have almost the economic recovery has started to take place and people are coming back to its normal. So the US dollar is also appreciating as compared to all the other currencies in the market, and against a key index measuring 6 major currencies. So these 6 major currencies include euros, pounds, yen, renminbi and all others, be it dollar, euro, Chinese renminbi, Japanese yen and pound. And what is hoping that the investors don't even expect it that it will ease anytime soon. So this is what is happening. Even though the US is going through a high inflation, but still the dollar is able to hold back its strong position. So why is it that the dollar is still able to hold back its strong position even though the US is going through a strong inflation? So see this image, the present value of dollar is around $1 would be around 79.92 Indian rupee. This I have taken on 21st September. So if you will be seeing this chart, that then you can see that the value of dollar has been fluctuating, but it is mostly on a rise. Even though when it is going down, it is coming back, going down, coming back, going down, then coming back, and now it is coming up. So this is how the value of dollar is going in the past few days. So now we will be seeing that why the dollar is becoming strong. What do you mean when we say that the currency is becoming strong as compared to other currencies? See, in simple terms, if we say that one currency is becoming strong and the other currency is becoming weak, or one currency is becoming strong in comparison to all the other currencies, so it means that now $1 can buy more of another currency than before. It means that the dollar will be more powerful now. With $1 we will be able to buy more things in comparison to what we were buying earlier. Like for example, if earlier $1 was 70 rupees and now $1 is 80 rupees. So earlier what we used to spend is, for buying a thing of 70 rupees we were spending $1, but now for buying a thing of 70 rupees we need to spend less than $1, because now the value of $1 is 80 rupees. So this is what it means, that when a currency becomes strong, is it means that the difference between the currency and other currencies are increasing, and the currency will be able to buy more of another currency. So let's see in comparison of yen. This rupee comparison I've already told you. See, earlier, a year ago, $1 was equals to 110 yen, but in present scenario, what has happened is now $1 is equals to 143 yen, which is almost an increase of 30%. So, for example, like imagine a year before, $1 is equals to 110 yen. What we were able to buy in 110 yen, now the Japanese people will have to spend for the same thing 143 yen, an increase of 33 yen. So this gap becomes a lot. Earlier what used to spend was 110 yen. Now the same person will have to spend for buying something 143 yen. It means that the Japanese people will have to spend more from their own pockets. It means that the pockets of the Japanese people will be hurt more. And the US dollar index has climbed more than 14% this year on the scenario of dollar being so strong, and the more impressive as compared against all other investments. And the increase of dollar in the market as compared to all other currencies has been very impressive if we look it in comparison to all the other investment measures. Like for examples, even though there are high inflation, then also the dollar is increasing and is holding its strong hold in the market, while on the other hand the US stock market has been down from more than 19%, and Bitcoin, we all know, has lowered so much. Bitcoin has more than halved, and the gold has lost more than 7%. While on these lines, if we will compare, then the dollar is performing very good and is having an increment as compared to all other currencies in the market. Now let us look at why is it that dollar is strengthening as compared to all other currencies. So first is that the US economy is doing better than all the other economies. Even though there is high inflation, but still the US economy is holding it back, and one of the major reasons for it is their service sector. The service sector of US is so strong that it is able to hold its economy. The job market has remained remarkably solid on the backing of the services sector. All the major IT technology companies is placed in US, be it the Google or the Microsoft, everyone is placed in US, and US is the major player when it comes to the information and technology. All the softwares and the hardwares are made by US. So because of, on the back of which the US is able to survive and its job market was able to survive, and this is one of the main and one of the biggest reasons that why still the US dollar is holding its strong position in the market. And the Federal Reserve's hawkish monetary policy. Since the time that economic recovery has been on the road, the Fed Bank or the Federal Reserve has been on a rate that where they are hiking the interest rates so that the people will come to them and invest their money instead of going out and invest somewhere else. So this hawkish monetary policy which is adopted by the Federal Reserve is also one of the reasons that why the dollar is strengthening. Interest rate hike. See, if for example, if the Federal Reserve will hike the interest rate, then all the people who was going out to invest their money so that they can earn better revenue and better returns. While on the other hand, if the US Federal Reserve will give the same amount of returns or will increase their return, then why will the US people or why will the investors of US will go out and invest in somewhere else? Instead of this, they will feel safe while investing in their own country and with a bank which is so stable. Like for example, if Federal Reserve was giving earlier 5% of interest rate and now they have hiked it and has made it 6%. And someone who's an investor from US and tries to invest in some other market and in some other country's stock market and is getting a return of 6.5 to 7%, then that person will feel it more safe and will feel that it's better. Instead of going out, I should be investing in within my own country and get a safe return of 6%. So that is why the Federal Reserve is increasing its interest rate and applying a hawkish monetary policy. Now, for one of the examples is a yield of 10-year treasury has been more than doubled to 3.44%, which was earlier 1.33% a year ago. So when during the COVID wave, what happened was the Fed Reserve or the Fed Bank has lowered the interest rate to its all-time low, but now they are increasing their interest rate, and around in a year from 1.33% they have hiked to 3.44%. And one of the reasons is the Russia-Ukraine crisis also. See, what has happened is Russia is one of the biggest player when it comes to the oil and natural gas. So, and also when it comes to export of it. So now that the export of Russia has been halted, so people were moving towards the US and the Middle East for oil. And when they were moving towards them, the rate of the oil was hiking, and because of which the rate was increasing. So the dollar was also getting a stronger hold as compared to all the other currencies. Now let us talk about whether a strong dollar will help US tourists or not, how it will impact the tourism sector. See, it will, yes, it will help the US tourist, because earlier who used to spend 50 rupees now have to spend 70 rupees. See, for example, a person who is coming from US and is coming to India, earlier he was getting for $1 50 rupees, and now the same person will have to spend $1 and in return he will get 70 rupees. So earlier the person who was getting for $1 50 rupees will now be getting 70 rupees. So it will be good for their pocket whenever a person will come from US to India. So whenever they will be getting their money exchanged, in return of dollars they will be getting the rupee, so they will be getting more rupee. So that is why the people who are traveling from US will be at a profit, while the people who are going to travel inside US, going to see the tourism of US, will be at loss, because the same logic will apply there. Like for example, if a person from India, what earlier used to get $1 for 50 rupees, will now have to spend $1 for 70 rupees. So when the person will go from India to US, so now they will have to spend 70 rupees for getting $1. So this will be harsh on their pocket. So travelers from US, travelers of US will be at a profit, while the travelers who are going from other countries into the US will be at a loss, because the dollar is performing better than the other countries. So they will have to spend more in comparison to what they used to spend earlier. This is what is the whole concept of why the people of US will be at a profit, because the dollar is performing better. Now let us talk about that what will be its impact on the Indian rupee. Most important part from your exam perspective, that you will have to relate it to the Indian rupee, that if the dollar is increasing, what will be its impact on the Indian rupee. See, the imports will become expensive, and while the exports will increase. Whenever the present countries devaluate, like for example, you can take an example that the Indian rupee is devalued. The Indian rupee is devalued means the other, as compared to the other currencies, the Indian rupee is not performing well or is devalued, that the gap is increasing. The other currencies are becoming strong while the Indian currency is becoming low. So what will happen is the exports will increase while the imports will decrease. The exports will get profit while the imports will be at loss. So this is the same concept, that the exports will be at profit and the people will be exporting more, while the imports will become expensive because we also need to pay them back for the imports. So the imports will become expensive. This is what is the relation. See, the imports will decrease, the exports will increase. This is a very logical relation that you people have to remember, because we will have to pay them back for imports. That is why the imports will be lowered, because we will have to pay them back more, because the difference between the dollar and the rupee is increasing. So what for $1 we will have to pay them will also increase. So money from our pocket will be going at a higher pace. Then it comes to crude oil, and because the price of crude oil is increasing in the international market, so the crude oil will also be very expensive for us. As the price is going up, what will happen? We will have to pay more because the prices are going up. So what will happen? Our current account deficit will increase, and this will be a negative. This will be a negative factor for us. So this is how the relationship will go. This impact on Indian rupee for dollar getting strong will be negative, and India's import bill will increase and it will shoot up, as I've told you, because the imports will become expensive. We will have to be paying more, and because of the crude oil prices rising, we will have to pay more. That is why the import bill, that is the current account deficit, because for export, see, you know what is the current account deficit. See what happens in India in current account deficit. There are exports and there are imports. Bear with my handwriting. There are export and there are import, and we know that we depend on imports a lot. So we export things also, but we do not export that much how much we import from outside. So we are dependent on imports. So what will happen is, when we import from outside, we also have to pay them back, and when we have to pay them back and the rupee is decreasing as compared to the dollar, so we have to pay them back more as compared to the earlier times. It means the money for which we are giving is also becoming very harsh on our pocket. So that is why the difference between the export and the import keeps on increasing, and the current account deficit also keeps on widening, and that is why the India's import bill will also increase and it will also shoot up. Then FPI pull out, because the Indian rupee will be devalued as compared to the US dollar. So people will think that instead of investing in a country which is not performing well, whose currencies is not performing well, then instead of it, we should invest in a country whose currency is becoming strong and is performing well on the international circuit. Then the current account deficit widens, I've already told you. Then the loan repayment goes up. Like for example, every country takes loan from the other country or from the World Bank or from the IMF. So if a country who has to pay back the loan in the dollars, then for them the loan repayment will also go up. So this is the impact on Indian rupee if the dollar will strong. Then the imports will become expensive, because of which India's import bill will also strong and current account deficit will widen. Then the FPI pull out from Indian market. Crude oil is also expensive, so this will also hurt our pocket. Exports will increase and loan repayment also goes up. Now let us talk about that how can the RBI handle this situation. So what are the steps that RBI can take to handle the situation when the rupee is weak and the dollar is strong? Sharp interest rate hikes in India. this is a step which the RBI can take, because if the RBI will increase the interest rate, for example, the present interest rate is 5%. So if the RBI will increase the interest rate to 6%, then the people who are pulling out their money from the Indian market will think of investing their money in Indian market, because they will be getting a better interest rate. Then it can make domestic bonds and gilts more attractive by increasing the interest rate, so that more and more people can invest in the country and do not remove their money from the country. Then it can also use its large foreign exchange reserves to stabilize Indian rupee value in comparison to the increasing dollar. Then avoid paying in dollars and pay in domestic currency. Even though this is not that easy, but what the Indian government can also do is that instead of paying in dollars, they can talk to other countries that if they can pay in their own domestic currency, so that the dollars do not move out of the country. And then currency swap can also take place. Even though these 2 points are not that easy, but still one of the measures can be one of these. And so the RBI can do all these things to handle this situation. Now let us talk about that what lies ahead, and what the experts are feeling is that the increment of dollar as compared to the other currencies will remain high in coming days. So it is not that the rupee or the other currencies will be performing well and the gap between the dollar and the other currencies will also come down. No, for the coming days, you can see that the gap between the dollar and the other currencies might also increase, and there are high chances that there will again be a rate hike by the Federal Reserve. So if this step will take place, then further the gap between the dollar and the other currencies will increase. Now let's come to the prelims MCQ, and before saying this, I would say thank you so much for bearing with my harsh throat. Just not keeping well from last few days, and I've read few of the comments also. So thank you so much for your concern. I think hopefully in the coming 1 or 2 days I will be back to my normal. So the prelims MCQ is, consider the following statements, and this is a previous year question from UPSC, and you people need to tell me the answer in the comment section. And it says the effect of devaluation of a currency is that it necessarily first improves the competitiveness of the domestic export in the foreign markets, and second, increases the foreign value of domestic currency, third, improves the trade balance. What is the effect of devaluation of a currency is that it necessarily first improves the competitiveness of the domestic exports in the foreign markets, increases the foreign value of domestic currency, and third is improves the trade balance. Which of the statement given above are correct? And the codes are 1 only, 1 and 2 only, 3 only, 2 and 3 only. So tell me your answer in the comment section. And the last slide for today is the mains practice question, and it says, why is dollar strengthening with rupee and other currencies, and what is its implication for rupee and the Indian economy? This is a 10-marker question, and the commands are why and what. So do your answer writing practice, and that's all for today. Thank you so much for watching. Till we meet next time, keep reading and keep writing.